Okay, we're live. Hi, Jordan. Welcome to Venture with Grace. Sorry, I'm like literally giving every guest a major heart attack whenever I see this is live.
Just jumping right into it. I like that.
Exactly. Yeah. Okay, so to start the show, I want to give the audience a little bit of your background. So you started your career at Goldman Sachs, and then you have been an investor, and you also joined on the finance team at Shift Technology, and later on, now you're a partner at Prudence. Why don't we start with like what are some core lessons that you've learned in your career that you kind of took into your career later on today?
Yeah, definitely. I didn't tell you I was going to do this, but I'll start by telling everyone that I was like in your big doghouse for a while because this is like the third time that I was scheduled to come on here. And I think the first time I rescheduled, the second time I woke up with the flu, and I think it took you a while to give me the third shot. So I appreciate you doing that.
No, I'm
So happy
glad
to be
that
here.
I have to literally go to New York to convince you.
Yeah,
That's so happy.
it worked. It worked out. I'm here
Yeah,
and happy to be here. So thank you for having me. So yeah, great question. And maybe I'll kind of like walk you through my background and career progression, and then I'll actually answer the question that you asked. So started my career, as you mentioned, in investment banking at Goldman Sachs, where I actually covered power and utilities and oil and gas. So a very far cry from the technology world that I live in today. And I really I candidly had no idea what I wanted to do when I was leaving Goldman. But I like the idea of going deeper on companies than I had during my banking days of learning kind of what it takes to analyze companies, to analyze industries, how to ask the right questions, and how to get conviction ultimately on a view that I was willing to put money behind. And so that initially actually led me to hedge fund world and public equity investing. So I spent a few years at a long short hedge fund called Partner Fund Management, based out in San Francisco, investing across sectors, but still with a heavy emphasis on oil and gas and power and utilities, which were the two categories that I'd covered at Goldman. And I learned pretty quickly that it wasn't for me. I just didn't have the passion for it. I really actually liked the investing part. So spending time going deep on companies, going deep on sectors, really a lot of that job is just learning and talking to people and listening. And so that's something that I was kind of right about from the beginning. But I had zero passion for the public markets, like absolutely zero. And I think hedge fund investing, just by its nature, is relatively short term in the way that people think about things, and I like to think about things a little bit longer term. So decided I was going to leave Partner Fund. At the time, I was living in San Francisco. It was the early 2010s. I was surrounded by the technology industry, and this was the time when VCs and tech companies were subsidizing my entire life. So I was taking like really cheap Uber rides across the city and getting free meal delivery, and like was absolutely loving it. And then everybody that I knew in San Francisco was working in technology. And I kind of took a look at what I was doing, what they were doing. And I said, I am focused on sectors that are kind of stuck in the past, and I want to be doing things that are driving the future. And so really dedicated myself to wanting to build a career in the technology space and take some of the things I learned from my, the initial parts of my career into that second phase of my career. The other thing I thought is I could try to jump right into technology investing, but wouldn't I be a more effective investor if I operated first for a few years, got my hands dirty, understood what it took to build product and the way that venture-backed companies operate. And so in 2015, I went and worked at a company called Shift Technologies, which at the time was probably the largest tech-enabled marketplace for used cars in the US. It was quickly surpassed by Carvana, which is now a $50 billion public company, but very similar idea. And my role there was actually on the kind of consumer finance side. So my role there was to build out and run our lending operation, which at the time was very nascent, but lending in used cars is actually the part of the business that typically earns the most margin for car sellers. So this meant building out partner lending through some of the biggest lenders in the country, like Capital One and Ally and Santander. It also meant creating our own direct lending capabilities. So the ability to ingest customer information, make an informed credit underwriting decision, originate a loan, and sell it off in the capital market. So it was a really interesting role. I learned a ton, but ultimately felt the urge to get back to the investing side and kind of take what I'd learned from the previous parts of my career and really apply it towards technology investing. from Shift, I actually moved back to Goldman Sachs, but in a very different part of the firm, back to the investing side and focused on late stage venture and early stage growth at Goldman Sachs Investment Partners, which is the $1.5 billion growth equity fund, which is part of Goldman's asset management division. So at Goldman, I was a generalist, though given what I'd been building at Shift, not surprisingly, spent a lot of my time in fintech, both consumer fintech and B2B fintech. And during my time at Goldman in the late 2010s, started just seeing more and more fintech applications for the real estate and construction sector. Candidly, it was not a thesis that I had developed. It was something that I just started to see more and more of, and just really interesting businesses that were founded with those end markets in mind. And then increasingly more SaaS applications for those same sectors. Started spending a lot of my time focused on those end markets being, real estate, construction, infrastructure, the ones that I focus on now. And what I saw was just tons of parallels to the fintech sector, right? So you had massive end markets, untouched by technology or really underserved by the existing technology solutions, but with buyers that were desperate to adopt technology. And so I decided I want to spend all my time focused on the space. 2019 got connected with Gavin Myers, who's now my partner here at Prudence, who had developed a similar thesis, joined forces in 2020 and raised our first fund together that year, and then our second fund in 2023. And over the last 5 years since I joined, we've now raised over $150 million of capital and deployed it across, I want to say, 16 different portfolio companies. So that's kind of the background in its totality. I know not the question you asked. But in terms of getting to what you did ask about lessons learned, there are lessons from every stop in my career. I think Goldman is my first experience at Goldman in investment banking. It was a long time ago, but many of those lessons are still really foundational to the way that I operate and invest today. And this may be a little bit controversial in the technology world, but anytime I talk to a college student or somebody who's thinking about to do, I do recommend working in investment banking because I think you learn a ton and a ton of skills that are valuable, like even to this day. And so, look, I think in banking for me, it was, may sound basic, but you kind of learn how to be a professional, right? You learn how to communicate clearly. You learn how to manage people, both manage up and manage down. You learn how to prioritize your time when there's a lot to get done and not a lot of time to do it. And so I wouldn't say there's like one lesson from those days, but like you really learn how to be a professional. I think the other thing about being in a firm like Goldman in investment banking is the network of individuals that you work with there is like unmatched. I think there's only a couple of times in your career or life where you have an opportunity to build a network like that. I think people talk a lot about business school, but being in an investment banking program at a firm like Goldman is another one. And so, there are people from my time at Goldman who are now partners at Sequoia and partners at Bain and partners at, other really big funds. There are people that are CEOs of large public companies or private equity owned companies. Funny enough, the COO of our fund here at Prudence was actually a classmate of mine at Goldman. So like you find amazing people and they stick with you, I think, for your entire life. So I think lots of lessons learned in my first stop at Goldman. When I moved to Shift and kind of my first experience in the technology sector, I mean, that's the other one that like really, really sticks with me is I think, the lessons learned as an operator are different, but are super relevant to what I do today. And I think do make me a better investor. And this is like, that's my first and only operational role. It was only for a few years, but I really got to see what it takes to build product, to recruit great people, to deal with the ups and downs of sales performance and marketing and the elements of kind of what it takes to be a great leader and what ultimately causes businesses to succeed or fail. And so now having been on the investing side for 8 or so years, I think, since I moved back to the investing side, that's really stuck with me. And I think that experience is hard to replicate. And so, I speak with founders every day. I spend time with management teams, but also speaking to operators and engineering teams. And I visit companies for board meetings, but like nothing about spending time with technology companies can replicate the experience of actually working in a technology company. And so there's lots of lessons from my time at Shift that stick with me to today. I think, I'd say there's like kind of two that'll always stick with me. And it's funny because they seem counter to each other, but I think they're somewhat, different sides of the same coin. I think one is it's like the understanding that building product is hard, right, and time consuming. And I think that there can be a bias as an investor to talk to a founder, talk to an operator at a company, and not understand kind of why things take a while, not understand why things aren't happening right away. And you learn really from being an investor about what it takes to build product, to engineer a product, the end-to-end process of product development. And I think it gives you a good level of patience. I think, the flip side to that coin is you also learn kind of like what you can do when you need to move really quickly and do more than you think you can do. And so, I've kind of taken both of those lessons away. It's one, kind of be patient, understand what it takes. Two is, when there's a time to apply an appropriate amount of pressure, like companies can move really fast and do really amazing things. And I know that because, I've been part of teams that have done that. So anyways, I know that's probably more than you bargained for, but hopefully gives you a little bit of sense of my background and some of the lessons learned.
Totally. I totally feel like, having the operational experience and also like the investment banking training is like really crucial to like, like you mentioned about like, having the work ethic, teaching you how to work, like manage up, manage down, or like actually packaging your idea into like a communicatable thing is very important. Maybe we could start diving into the property tech part. So like I feel like, there are 3 different major sectors that you guys are interested in. For example, the data infrastructure layer, the artificial intelligence enablement, autonomous vehicle SaaS, vertical SaaS. Maybe we start with like autonomous vertical SaaS. Like, what is autonomous vertical SaaS?
Yeah,
I just know vertical SaaS, but
yeah, and I haven't. Maybe I'll do like the quick walkthrough of kind of our strategy as well first, just to give people a sense for kind of like the way that we think about the world. Yeah, so we're as you mentioned, like we're a vertical focused fund. All we focused on is technologies for the real estate, construction, and infrastructure sector. So really kind of like laser focused on those verticals. We invest broadly kind of at the early stages. So this can be as early as the seed stage. It can be as late as the Series B. I'd say Series A is probably like our most common entry point for companies. The thing that we always say is we care more about the stage of the company than the name of the round. So typically, but not always, we're investing in companies where there's a product in market. We understand how customers are using that product, what engagement looks like, product usage, customer retention, and get an early sense of kind of unit economics and how a business will scale. So that lends itself typically to Series A, but can happen a bit earlier. And I think increasingly with the advent of AI is definitely happening earlier now because companies are being built, building products and acquiring customers faster than ever. So, I'd say maybe we're moving a little bit earlier even. We, as a fund, run really concentrated. So we only invest in 10 to 12 companies per fund. So high conviction, low volume investors, which means that we typically lead rounds, sit on boards, take active roles with our founders and do what we can to add value. Once we're an investor. You talked about kind of the categories of companies that we invest in, which is, really we invest in software, AI, and digital infrastructure, and kind of data as an add-on to that. And yeah, look, I think I'd say like we don't necessarily use the language autonomous vertical SaaS as much anymore. I think that was kind of like before we knew before we all as an industry knew like what AI was. It was like the beginnings of AI, right? It was you build SaaS for a specific vertical, and you solve kind of pain points through workflow software that then give you access to a core of data that you're able to use to develop your own internal capabilities around AI and automation. And so I think autonomous vertical SaaS has probably become vertical AI, which we're now all familiar with. So I think like said another way, like it's really vertical software is the first area that we focused, and give you like quick examples of the types of companies that we invest in these spaces if helpful. And so like in software, good example is a company in our portfolio called Salus. This was in our earlier portfolios. This is a 2020 investment. It's a leading health and safety platform for the construction industry. So they help general contractors and subcontractors generate their safety plans and implement them in the field. As I mentioned, it's a 2020 seed investment for us. The company's done great. They've grown, I think, 10 or 15x now since we first led that investment, have hundreds of customers across North America. And the reason that we love this business is because safety is one of the only processes in construction that's ubiquitous. So depending on the size of the project or the type of the project, you might need one software or another. You might need some processes, but not others. But you always need safety, right? It's critical on any construction project, and that's kind of always what we're looking for in our technology investments, is these big end markets that where the products are broadly applicable. And so whether you're building like a new football stadium, whether you're building a single family home, you need safety. We met the company. We had kind of started to develop a thesis around construction and construction safety and the use of construction software in the field, which is a really important element that I can elaborate on in a little bit. But it was a space with really weak competition, project management platforms that kind of had safety modules, but that were, I call them like half baked at best, but didn't really actually solve the needs of the people operating the field. And this was like one of the first and only companies that we'd seen at the time that was able to get their product in the hands of customers in the field. So the company has, I think now, like tens or maybe even hundreds of thousands of worker profiles in their platform, granular information on safety records and details of kind of where every worker is for all these companies at a given point. And when we looked at this company, one of the things that we started to see with them, and then we continue to see as we invested more in construction tech, is they kind of had this flywheel go to market that again is this really powerful, really unique thing to the construction real estate space, where they sold their product to general contractors, so those that are kind of overseeing the building. The general contractors onboarded their subcontractors to use the platforms, and so for every GC, you might have dozens of subcontractors that come on to every project, and then those subcontractors would take the platform to their other projects and then introduce it to general contractors who would become users, and you create this really interesting flywheel in the construction space. So that's like one of the examples of kind of like a vertical SaaS company that we would invest in, and hopefully gives you kind of elements of what we're looking for in terms of business model, size of market, end market, things like that. In terms of AI, which is, I think, the next theme that we invest behind, this is actually a relatively easy one for us because we just announced our latest AI investment about a month ago in a company called Unity. So that was announced, I think, in early March. Unity is an agentic AI platform for the commercial real estate space. So they create autonomous agents for different tasks, starting with inbound lead management for their end markets, which include co-working, self-storage, office, the long tail of retail. And the great thing about the sectors that we invest in as it relates to AI specifically is that some of the tasks are just not, like I'd say most of the tasks are just not optimized and either don't use technology or use kind of basic workflow software. And so let's just use what Unity is doing in the co-working space as an example of that. If you're for most co-working operators, the way that they manage their inbound leads is you have a web form, maybe an email inbox. You get leads in. They have a group of kind of inbound SDRs that manage these leads, that call people, that email people, that maybe use HubSpot, maybe use Salesforce, but don't use any other technology, and are massively inefficient in the way that they prioritize and then optimize their lead conversion funnel. That's like a perfect use case for AI. And so instead of having a team of humans kind of managing responses to inbound leads, what Unity is doing is they're giving coworkers and self-storage operators and retail operators the ability to have an AI layer that's kind of like the first line of defense when you get an inbound lead, and gives their customers the ability to drive up conversion and massively increase response times. And as I mentioned, like with AI companies, I'm sure you're seeing this with all the folks that you talk to. The company was founded 18 months ago, and I won't say the exact numbers, but they already have meaningful scale and really good customer adoption, including including a couple of like really big enterprise customers who are looking for AI solutions. And the round that we led and announced a month ago was the first capital that they've raised. So the ability for these companies to, launch, build product quickly, get adoption, and then scale is kind of unlike anything that we've ever seen before. The last vertical that I'll mention that we invest behind is kind of this digital infrastructure theme. Again, the advantage of the end markets that we work in is that much of the infrastructure that you're building on top of in the real estate and construction space is really old and outdated. And so, commercial real estate is probably the best example of this, where you have these property management systems or PMSs that are basically all 30 years, 40 years old. So it's Yardi and RealPage and MRI, and there are a handful of others as well. But they're the platforms that basically every multifamily and office building are run on today. And they're basically used by every owner and property manager just because they're so deeply entrenched in the existing workflows. But one of the difficult parts about working with these legacy technologies, and this is the case across a lot of sectors in the built world, is dealing with integrations, right? The ability to take what is kind of like modern cloud-based software that you're using in other parts of your workflows and integrate it seamlessly with these legacy PMS solutions that in many cases were actually built before APIs even existed. And so what this typically means is that if there are APIs, the APIs are really poor, the documentation is really poor. Anybody who wants to integrate with these platforms kind of needs like full engineering team, weeks and or months, depending on the number of integrations you want to build, to engineer those integrations. And for, I'd say like, or early stage technology companies or anyone who wants to build those integrations, it like doesn't really make any sense to dedicate those kinds of resources to integrations. And so we have a company called Propexo that's built a unified API platform that allows customers to build a single integration with Propexo and get access to every single PMS platform because they've effectively done the hard work of managing those integrations, building those integrations, and creating kind of the free flow of data that didn't exist previously in the commercial real estate space. So they've built, functionality that didn't exist before. They've built webhooks, they've built sandbox environments, they built a really developer-friendly platform. And it's actually funny. Like when I was at Goldman, my fund led the Series B in Plaid. This is very similar to Plaid in the fintech space. So with Plaid, you have one integration, you get access to kind of every bank account in North America. With Propexo, it's very similar. One integration to rule them all, which you can integrate with, and then kind of manage your integrations all through Propexo. Their initial end market was early stage, real estate technology companies, those that wanted to sell to property managers and owners, but didn't have the resources or time, or kind of saw the benefit of working with a third party on integrations. But as they've continued to scale, expand their suite of integrations, the API endpoints that they hit, they found a lot of other folks that also have this same problem. And so, they're working with, internet service providers, they're working with cable companies, they're working with last mile delivery companies, some really big names that you would know as well, and solving these pain points for everyone. So, yeah, those are kind of like the three big buckets of companies that we look at. Again, probably more than you bargained for, but and then just some examples of the companies that we've backed in those different in those different verticals.
Totally. Okay, so I have so many questions there. Like one thing is like, I think you haven't mentioned the I think like Clear Story, and then also the drone. Oh well, you mentioned a little bit on the drone company, I think. So I wonder, so like when like a startup come to you, what are something that like, I guess like, since there's so many real estate subsector in the technology space. So for example, the drone that's like 3D modeling, that's like one thing that's like very popular these days. Like I went to like a deep tech demo day the other day, and then literally there's like 9 out of 10 companies that are doing something drone related. And I wonder, so like in the real estate space, like, and then you mentioned about the PMS management platform and stuff like that. So like, how do you separate like, let's say like, what are some like three most popular subsector in the property tech space, and then how do you filter out things that don't matter?
Yeah,
And then
it's a
how do you even like differentiate the 10 drones company? Because like everyone's doing the modeling for the building using drone technology. But yeah.
Yeah, it's a good question. Maybe I'll kind of like quickly walk through the drone company and what they do, just so everyone's on the same page. So the company you're referring to is a company called AI Clearing,
Mhm.
and what they do is they ingest drone imagery and effectively use their own computer vision models to turn that 3D imagery into cloud points to really understand where objects are in space. And they work with general contractors and owners of large infrastructure projects. So think like utility scale solar, pipelines, bridges, roads, tunnels, to give them real time accurate visibility into into progress and quality on those sites. And this is something that you can't do otherwise, right? Like the way of doing this previously was literally like a person with a clipboard would walk around. Let's just use utility scale solar because that's their biggest end market. This might be like a 5 square mile construction project, and they'd send a person with a clipboard out to go walk around and check off kind of what had been installed, check off, had it been installed in the right place to the right quality. And they would do kind of like a subset, I don't know, 5%, and kind of extrapolate that into what was going on a site. And so you get that data, I'd say it'd be relatively inaccurate, and you'd get it way late. And what that leads to is delays, reworks, like all the issues that cause construction projects to go way over budget, and to go way over budget and to take way longer than people expect. We met the company. We actually met the company during their seed round, and they had built, I'd say, a lot of the technology, but from a commercialization perspective, it was a little too early. But we kind of kept it on our radar as one to watch. And then we met them again before their Series A, and they kind of started to hit those milestones of both the product, the commercialization, the team, the customer base, and got really excited. As we dug in, I think there are a lot of things that we focus on when we look at underwriting and investment. I think I mentioned this before, but one of them is obviously you want massive end markets, and infrastructure, which is the area they're focused on, is that it's a massive end market that is consistently growing. As we say, like infrastructure is kind of popular and popular with everybody, and is something that both in mature markets and emerging markets is always kind of growing. So we look for really big markets, really great teams, and really unique capabilities. And I think when it comes to the capabilities, we're looking for capabilities that are both differentiated and defensible. And that's really like the hardest part of any underwrite for us. And you mentioned there are a lot of drone companies, and we've talked to a lot of them. But what we found with AI Clearing is like they had built their own proprietary computer vision AI models, but they actually ended up building, in today's world would probably be called a foundational model, right? Where like they're one of the first to really have the ability to ingest this information and tell you, draw conclusions from it. And so there's a world in which people can actually build on top of their AI models going forward. But look, we scour the market. We saw the other solutions. There were a lot of, I'd say, relatively straightforward solutions that were ingesting images and turning them into 3D models that you could then manipulate yourself, or you could click on one area and then click on another and measure a distance, or maybe they could measure the size of a pile of dirt. But actually the ability to ingest that information and give you real insights was unique, and was the thing that drew us to that company. And when we're talking to companies, that's what we're always looking for, right? It's what is differentiated, what is defensible, how are you going to stay ahead, and what's kind of hard for others to do that you're doing right now. And they checked all the boxes on that, and not surprisingly have done great since we invested. I think I'm going to get the exact number wrong, but I think 45 or 50% of I'd say general contractors who do 45 to 50% of all the new solar installation in the US are customers of theirs today. So they've quickly kind of taken over the market, and it really is that capability difference that has driven success there. So those are a couple of things that we're looking for when we're looking at these types of companies.
I have a question on that. So, like, how do you meet the founder of these companies? Because it sounds like it's like a really sub niche sector, but they're like dominating that sector, right? So, like, and then since you mentioned at the beginning, like, you guys are very highly concentrated, having a very concentrated approach, like 10 to 12 companies, and then you probably take like a huge ownership in it. Like, how do you, this is, I feel like you mentioned about like this particular company that they already have like, 40-50% of the entire sub market to like use this product. That's very different than like, a lot of these like, AI SaaS startups that are, they just have a product, but like, I don't know. Like, so I wonder, how do you think about the three, like, first of all, how do you encounter the company? And then number two, it's like, what are on your like diligence comfort list that like you have to get comfortable with to invest in a company with becoming their lead investor?
Yeah, definitely. So I'll start with the first one, which is maybe a little bit easier answer. It depends, right? Like, how do we meet them? I think this is where being a sector specialist really helps.
Mhm.
We do a lot of proactive sourcing.
Mhm.
So we'll create market maps, we'll create lists of companies, we'll create kind of subsector theses, and go find the companies that fall into those buckets. And so, Clear Story, which is one of our more recent investments, is a good example of that. It's a founder that we had on our radar for a while, hadn't met, cold outbounded, got an introduction, had a first meeting with them, and 6 months later we were investors. AI clearing is like another fun example where, and this actually happens a lot, is a generalist investor send it to us because they wanted our views, because they know that we know these sectors and these end markets really well. And so being a sector specialist just gives us like all these advantages that others don't have when it comes to sourcing and meeting these companies. So a lot of our sourcing happens that way. Not surprisingly, we get a lot of inbound as well. And so we're constantly getting inbounded from founders at the early stages. And the other really interesting channel is that like our founders are great channels of sourcing for us, because a lot of times our founders, as they continue to scale their businesses, become mentors to founders at the earlier stages, and will then kind of introduce us to the founders that they like the best and that they think are building the most interesting technology. So I'd say like sourcing is not easy, but it's not, I wouldn't list it amongst one of the more difficult problems for us given our sector focus. Company selection is a lot harder. And you kind of alluded to that, and it's some of the things I mentioned before, right? It's you're looking for really large end markets. Look, we understand most of these end markets really well because we are sector specialists, and so we can typically disqualify companies pretty early that we think are too niche, have products that won't scale really well. But given the end markets that we serve, construction, real estate, infrastructure, like typically you have a big enough end market. One of the things that we find that I think is unique to the construction and real estate space is that a lot of our founders come with like this nuanced understanding of the sectors, and are actually from industry. And so, Gabe Guetta from Salus, Cameron Page from Clear Story, Emil Brill from Venner PM. Like these are all people who have deep expertise in the areas that they're building for. They surround themselves by great technologists, great engineering teams, great product teams, great revenue teams, and are able to build really successfully. So I think for us, like great founder could mean, third time founder who's built multiple successful companies and has had exits outside of the real estate or construction and infrastructure space. But it can also mean people who have deep industry expertise who are applying that to building technology companies. As I mentioned before, differentiated and defensible, technological capabilities. And then, look, I think the other important part is just, timing, right? I think you mentioned this, like, we like to take relatively large ownership positions. We lead or co-lead almost every deal that we invest in, because we're very concentrated. We'd like to be very involved. And so timing matters, right? We meet a lot of companies a little bit too early. Sometimes we meet companies a little bit too late, and it doesn't make sense. But ultimately, we're just looking to back the best founders and the best companies.
Totally. I have a question on like when you do the market mapping, how do you actually create a market map? So for example, I feel like also maybe we could talk about like how the real estate technology space, how does the money flow basically? I know like the real estate, it's like I feel like it's very different than real estate technology just because it's not like I guess like not everything is I think most people are like benefiting from like renting out or selling a property, but in the middle of this transaction process, there's like 400 things that you could be investing in.
Right.
But I guess like how do you think about how the money flow in the property tag space, and how do you actually figure out which part will be most like monetizable and do a deep dive into the market map?
Yeah, those are very, very interrelated. And I think like I'll start with the market mapping piece. It's about mapping the workflows of the industry, right? It's about
Mhm.
understanding if you're a real estate owner or property manager, what are the workflows that you have today? What are the customer workflows that exist? What are the property management workflows that exist in the construction space? What are the workflows that exist all the way from the owner who kind of has the concept and the funding for the deal, the lender, the general contractor, the subcontractor. In construction, sometimes there are multiple layers of subcontractors. So subcontractors will sub out, work to a second tier subcontractor. So it's mapping those workflows, right? It is
Mhm.
talking to the people that we know in the industry, talking to our founders, talking with experts, being at conferences, listening to what people are telling us about the workflows and the pain points that exist, and then going out and finding those companies. And again, like that's a mix of desktop research, talking to companies in the sector. So we are constantly talking to leadership teams, innovation teams, finance teams at large general contractors, at large owner operators and property managers in the real estate space, to just map those workflows and figure out and just figure out like where we should be spending our time, and how and kind of where exactly we can plug into where companies can plug in to solve those needs. I think the second question was around kind of like how the money flows, and how we decide kind of like where to invest. It's all about solving these kind of workflow needs for companies. And once we understand kind of like and map those workflows and understand where these companies fit within those workflows, it's about figuring out how these companies solve these pain points. And to your point, there's kind of like the business of real estate and the business of construction, the business of multifamily real estate, as you alluded to, at its simplest core is, somebody, a renter pays for the pleasure of renting an apartment from an owner with a property manager that sits in the middle. But there are unoptimized workflows all over the place that can drive efficiency, whether that is through cost savings, through optimizing human capital processes, whether that's through additional revenue generation, through ancillary products that owners and property managers can offer to their renters or tenants in the case of office. And it's just figuring out kind of like what are people going to be willing to pay for? What is the problem you're solving? How big is that problem, right? It's like when we're having these conversations with owner operators and property managers, are we hearing the same thing over and over again? When we're talking to early stage companies, are we hearing the same thing over and over again? And that's really ultimately the thing that drives most of our investment decision is this a big enough pain point? Is the technology good enough? And does it plug in somewhere where we think it's going to drive meaningful ROI, either from a cost reduction or even more powerfully from a revenue generation standpoint with the customers they're serving?
I wonder, I guess, like when you're doing the workflow mapping, where do you feel like most innovators are innovating? And I also want to put in like more of like it's like a piggyback question, but so since I feel like you live in New York, like it's very different than the Bay Area. Like the Bay Area people are like, oh, I have this really cool technology. I need to immediately find a problem to like smash it on. But like I guess like you when you mentioned about like a lot of the companies that you guys have invested in are like industry experts. I remember like listening to your other podcast, like you were mentioning about there were someone who used to work in construction, build a construction company product, right? I think that's very different than like I think the Silicon Valley builder mindset, which is we have this really cool AI technology. We need to like immediately find a problem. Like I guess number one is like where do you feel like most people are building in the entire real estate slash construction workflow or property tech workflow, and then second of all, it's like how do you think about like combining the technology mode and I guess like an industry mode or like industry insight in
Yeah, but
investing?
both great questions. And I mean, the short answer to the first question is like they're building everywhere. And I'll maybe quickly walk you through kind of like, you know,
Mhm,
why people are building for some of these sectors. And you know, like I'll use construction is a great example, and we've been very focused on construction for the last couple funds, but I think, you know, 4 of our 6 most recent investments were in the construction space. But people are building for the sector because it's massive and because there are pain points. And I think there's maybe like a misconception amongst people that are outside of the real estate and construction world, that the real estate sector or the construction sector don't want to adopt technology or are bad buyers of software. But I actually think it's the opposite. I mean, there are obviously holdouts, but the vast majority of contractors, of real estate professionals that we speak with are actively seeking the best technology solutions
mhm,
because they want to help drive efficiency in their business processes. And you know, like project management software, Procore, Autodesk, big construction project
mhm,
management software has been around for decades. You know, scheduling software has been around for decades. And you now have like a wave of decision makers in their 30s and 40s who've grown up with technology, and who are highly educated and
mhm,
understand that software is better than trying to drive efficiency through optimizing processes. And so, you know, look, what this means is that these people are not just like open to hearing about new technology, but they're actively seeking out that technology in order to improve those operations that they're focused on. So you know, people are building for everywhere, and I think that's part of the reason why people are building for construction. And the answer is somewhat similar and somewhat different depending on the category that you're talking about. But these are large markets with a massive appetite for new technology to drive efficiencies. You know, as it relates to AI, I think, like, you know, as I mentioned with Unity earlier, I think that's a great example of kind of like the benefits of vertical AI, right? It is understanding the workflows that exist in the market. The CEO of Unity had previously worked in the real estate space. He had spent time at a technology company focused on the co-working sector. He had spent time working at Colliers in the commercial real estate space. He really understood the problem set that faced all of the folks that today are his customers, and was able to build, leveraging the tools that exist today for AI workflows, build very specific workflows, very specific knowledge bases, very specific applications of AI for the sectors that he was serving. And this is, you know, we've talked a lot of and thought about a lot about internally about, you know,
mhm,
the difference between vertical AI and horizontal AI, and ultimately who are going to be the winners. And what we found is like the workflows for our sector are unique. The workflows for our sector need to be really well understood to actually build effectively for the sector. And so I would say that like it's the people that are building AI products in the real estate and construction space, are building in a similar way as those that are building kind of general AI tools for horizontal use. Their end market is just a little bit more specific, right? I'm going to build it. It's going to get really quick adoption. I'm going to go as fast as I can. I'm just only going to try to sell to these customers. I'm going to build a very specific product around their workflows and their needs. And so, look, I think we're at like the very early stages of AI adoption in real estate and construction, but Unity is, again, a great example of a company that has built the specific product, the specific workflows, leveraging the capabilities that exist in the market today, to just build a great product. And they're seeing really, really fast adoption.
Mm. I wonder, so like when you are thinking about like how I guess like the industry expert like Unity to leverage AI to build something, like how do you think like people are, I guess like is there any specific subsector or like something like implemented AI that you feel like it's like very surprising, or like is this more of like in the past, like we were like, I feel like in the real estate industry in particular, a lot of it are like, you know, just like generational technology right now just becoming just using like a normal SaaS
Yeah.
product, but like, you know, is there anything that's like actually leveraging AI that have like a really superior result to, you know, compared to like the normal just like SaaS by?
I think the short answer is everything will, right?
Mhm,
Like,
mhm,
all of, I'd say we've gone from a place where 24 months ago, we were thinking about
mhm,
AI. We talked about autonomous vertical SaaS. That was like our initial kind of thinkings around AI.
mhm,
And we were, starting to see AI companies. We've invested historically in companies that incorporate AI. Our company in Europe called Casafari, they
mhm,
use machine learning to ingest 35,000 different data sources, and create kind of like a single source of truth for real estate data. So that was kind of like an early application of AI. AI clearing obviously has their own proprietary computer vision models. But I think the short answer is like it's gonna be better than software everywhere. And I think like I'll give you an example. And again, I keep coming back to Unity just because that's fresh in my mind because we just made that investment. But when we were doing diligence on Unity, we spoke with one of their customers, and that customer had an inbound sales team that was managing leads, manually, making calls, sending emails, and they were using HubSpot as their workflow SaaS CRM tool. And he'd been using Unity for a couple months, and at the end of the call, he said, "By the way, like, the other benefit of Unity is that I'm going to be able to get rid of HubSpot, right? Like
mhm,
this is happening, right? Like this is AI is better than software plus humans at a lot of the tasks that it needs to do, and we're seeing that literally everywhere.
mhm,
I think a lot of the solutions today will probably, I'd say, more augment versus replacing the tasks that are done manually today, but it's better. And the other like really surprising thing that we're seeing in the or might be surprising to others, but that we're seeing in the construction and real estate space is that you're having this leapfrogging effect where you're actually seeing people move directly from not using technology at all to using AI. And so I think there have been kind of platform shifts over the year where people went from doing things manually to working with on-prem software to working with cloud software to now working with AI platforms. There are a lot of people who never caught onto any of those platform shifts and still do things manually in the real estate and construction world. And we're seeing those people immediately leapfrog past software to AI. And so Unity is another good example. A lot of Unity's customers don't use workflow software for anything. And Unity is becoming their layer. And I think the reason that people are willing to leapfrog the use of software and move straight to AI is because all of a sudden you're not needing to necessarily convince somebody that they need to pay for software, and you're not fighting against other software companies for adoption. You're all of a sudden eating into human capital budgets, right? You're all of a sudden replicating the work of a human with technology, and so it's
mhm,
not an incremental cost in many cases.
mhm,
You're getting the benefit of an additional human for a much lower cost than what it would take to
mhm,
hire that human, and or driving massive efficiencies in your human capital cost. So yeah, we're seeing adoption everywhere. And again, maybe surprising to others, but really like people that you would not expect are adopting AI quickly, and using it a lot.
mm. I wonder, so like another thing is like since you mentioned about like AI is everywhere, how do you decide on like I guess like oh sorry, maybe I should start with like how do you decide on like I guess like one thing I mean I wrote down about like go to market. One part is like about you mentioned about like Unity or other companies in your portfolio that they are industry experts and then they actually know where how to find their like I guess niche clients and like what does a go to market strategy kind of look like for these like traditional or like not I mean the AI companies in the traditional space because I think it's very the real estate industry is like a very a lot of people are like generational uh people running the business and then like how do you help them break the pattern? Obviously they have like the younger people in the generation that's like great, but on the other hand there's like a lot of people a lot of like software are super legacy softwares and because people are I feel like people are less willingly to take a lot of the risks because it's involving with um like a lot of I guess like technology. I mean, I'm sorry, like I just have one company in mind that like I heard that like they were trying to automate a particular segment in the property tax space, but they were having a lot of trouble to actually convincing, let's say, the landlord who is 75 years old to actually adopt their technology and stuff like that. So, and then also I feel like in the industry, there's a lot of like controversy. So for example, in the past, there's some sort of, um, yeah, like I feel like it's just, there's like a big company that in the rental space that are doing kind of interesting things. So I guess like how do you think about like the
Yeah.
adoption slash go to market strategy? What does it look like for the property tech companies?
Yeah, it's very dependent on the end market and the type of company.
Mhm.
I'll maybe make one comment first, which is interestingly enough, and again, I've kind of said surprising a couple times
Mhm.
on while we've been talking, but even the people who've been in the industry for a long time are now starting to develop plans for kind of enterprise AI adoption and
Mhm.
strategies. And so if you look at the biggest general contractors, if you look at the biggest owners and operators of multifamily or office,
Mhm.
all of those people have AI strategies now and
Mhm.
or are developing those AI strategies.
Mhm.
And a lot of those people I think are the people that you would think of typically when you're talking about real estate and construction as people who've been in the industry for a long time, people who may have historically been unwilling or unable to really adopt new technologies and understand the benefits. They all understand AI. Like it's crazy to see. They all get it and they're all thinking about it. Um, I'd say like there are different flavors of AI, right? There are kind of like more enterprise like solutions where you're doing enterprise search or other enterprise platforms that then layer on agentic capabilities. And for those, the go to market typically looks like you're having to talk to the senior level people and get real buy-in, and that can take a while. Not because they're not thinking about it, but because getting an enterprise-wide license at Turner
Mhm.
Construction or Suffolk Construction or one of the other large construction firms or a big owner or operator of real estate takes a while, right? Enterprise sales
Mhm.
take a while. And so like, some of what we're seeing is that top down, this is part of our AI strategy. This is part of how we're going to adopt AI at the enterprise. And that can take a little while, but it's not due to an unwillingness to adopt these technologies. The flip side to that is there are a lot of technologies in the real estate and construction space that are sold bottom up, right? That are
Mhm.
adopted at the lower levels that maybe solve a more unique pain point that maybe aren't selling to the enterprise, but are selling to the long tail of contractors, general contractors, commercial real estate owners and operators. And those are quicker, and that's a ground game, right? That is having SDRs and AEs out there calling people, being on construction sites, going to see owners and operators where they are, really kind of showing them how this is going to fundamentally change the way that they operate their businesses. And in construction, a lot of times the way it works is you get adopted on a single project, you get adopted then by, you know, a single market or a single division of a firm, and then eventually you end up getting an enterprise-wide license. But it can happen either way. And I'd say like the resistance that we've historically seen to the resistance, if any, that we've historically seen at a kind of corporate enterprise level uh, to technology and software, we've seen none of that with AI. And so I'd say it's been easier than we might have thought to get our AI companies to sell their products in the market.
I another question I have is like about follow on funding. So like how do you decide on which one to double down on? And or since you guys have like a very concentrated portfolio, do you just reinvest in like not reinvest, but like invest in everything's next round?
I think you kind of answered your own question. So yeah, we because we run so concentrated, because we invest in only 10 to 12 companies per fund, because we lead rounds. When we invest in companies, we plan to invest multiple times in those
Mhm.
companies and continue to support those companies. In our last fund, which is fully invested at this point, we've written multiple checks into every single one of our companies. So it's something that we think about and that we actually live. And I think it's when we invest in a company, we are there to support those companies, to help those companies scale, and then to support them through their next capital raise, right? A lot of our job is preparing founders for their next capital raise. It's making sure that they're telling the right story, but also hitting the right metrics. It's making sure that we're having conversations with growth equity investors that we know really well, who might be interested in these companies, and getting them up to speed before a company goes out to raise. And look, like we want to be supportive of those companies, and our strategy doesn't lend itself to, pick the 15, 20% top performers in your portfolio and pile into those companies. We will obviously continue to invest more and more in the companies that are doing really well. But we do like to back all of our founders through multiple rounds of funding, just because like that is our ethos, and that's kind of our goal here, is to back great companies early that continue to need and want and deserve our capital. And it's worked out great for us. As I mentioned in our last fund, every single company that's raised a follow-on round of funding, we've invested in those rounds. I think 9 of our 10 companies from that fund are still going strong today. One was an exit, but a pretty good exit for us. So we do continue to back all of our companies after investment, and that's just it's just a fact of the way that we like to invest. The fact that we are deep, the fact that we kind of are arm in arm with our founders going forward, and we put our capital where our mouth is.
I also want to know more about how, like you mentioned about like growth equity investors, like how do you think about the exit for some of these like property tech companies? And then also when they are onboarded into, let's use like warehousing, for example. Let's say you have like a technology that's implemented for like, let's say Airbnb for warehouses. So like, how do you think about like, let's say if they work with one of the top like warehouse owner in the country, maybe they cannot work with their competitors or whatever. Like, how do you think about these like competitive landscape in the real estate industry? Because I feel like it's very different than you have like a Yelp and then like every restaurant.
It's a good question. In terms of exits, like I think it probably looks like any kind of like vertical focused investor, right? There are multiple paths. I think every company that we underwrite and invest in, we hope one day is a big enough company to stand on their own and go public. And we definitely have a couple of companies in our portfolio that we knock on wood or hope are trending towards that reality at some point. But there are multiple paths to exit for every single company. Public markets is one of them. Financial buyers, middle market private equity firms, larger private equity firms. There are a lot of kind of technology roll-ups that are happening now as well. And then obviously, I think in our end market, strategics is another really, really big one. And look, I think like you can't be too focused on, I think, the outcome to your other question. You can't be too focused on the potential outcome and exit when you're thinking about running the business. And so, does your work with a competitor possibly preclude somebody from acquiring you? Maybe, but is it going to drive value in the business? That's what's more important, I think. And so I'd say like we are always thinking about what potential exits could look like. Not surprisingly, like strategics are beating down the doors of many of our companies to acquire them, and it's just a question of kind of timing or whether that's the right path to exit. But I'd say we think about what you mentioned, which is the kind of competitive dynamics of potential acquirers and potential customers. But ultimately, like we just can't put it front of mind, because the first goal is to make these companies as successful as possible. And then we worry about the exit, when we're a little closer to that.
Love that. Oh, I want to be mindful of the time. Let's wrap with like a 1 minute fire round. Okay, what's your favorite book?
My favorite book?
Yeah.
That's a great question. This is going to sound a little nerdy, but I've read all of the Dune books.
Oh, that's great. Wait, do you like the movie or no?
I probably sound like somebody who's like a Star Wars nerd or something. The books are much better. The movies are fun, but the books are way better. So for anyone who hasn't read the books, they're quite long, but it's worth it. They're really, really good.
Amazing. Okay, who made the biggest impact in your career?
Ooh, that's a tough one. I don't have one person, candidly. I mean, I'd say like the person that I go to the most for advice is actually probably like my dad, or like people my personal networks. But in terms of impact on my career, like there are a lot of people along the way. I think at every stop I've had, I've had people who have been really helpful to me, who've kind of taught me different lessons. And I think, my goal has always been to attach myself to the smartest person that I work with and learn as much as I can from that person.
Love that. Who would you invite to your dinner party?
Dead or alive?
It's your party.
It's a really good question. I'm a massive sports fan, so it'd probably be somebody in the sports world. It'd probably be like Michael Jordan or something like that. I grew up playing basketball and follow it closely, so it would probably be somebody in the sports world and not somebody in the venture capital ecosystem.
Where can we find you outside work?
What do I do outside of work? I play basketball. I spend a lot of time with my family. I have 2 little kids. We have a 4.5-year-old and a 2.5-year-old. So I don't have a ton of free time, but love spending time with my wife and family. We travel. We do a lot of fun things here around the city. So most of my time is dedicated to my family and work, but I try to find time for things that are fun for me as well.
Love that. Well, Jordan, thank you so much for coming on the show today. It was such a masterclass for property tech.
Thank you, Grace. I appreciate it.
Okay, let me quickly end stream. Sorry.